All right, so there are plethora of funds available in the market to invest your hard-earned money in, but how do you assess which is the right fund for your portfolio, and what are the criteria that one should look at to help you navigate through this maze? Today I have with me Anil Rego, founder CEO of Right Horizons. Also, do not forget to send across your questions on our WhatsApp number, which is 865-797-4571. You can also email us your questions on the money show at etnow.tv. And let's welcome Anil. Anil, hi, good evening, and welcome to the Money Show. Let's get connected to our viewers. I think we have the first question via email, and this is from Avinash. Avinash writes that he's been investing from Jan 2023, and he would also want to know if there are any changes required in his portfolio, and is the purpose of diversification being solved. So he's 31 years old, time horizon is 21 years plus. Asset allocation, it has equity mutual funds, PPF. He's been investing 50,000 in PPF. I think that is Sukanya Samriddhi Yojana that he's talking about, 50,000 over there, Nifty, UTI Nifty 50 index. He also has index, HDFC index fund, S&P BSE Sensex plan. He has Motilal Oswal Nifty mid cap, direct plan that is. He has Kotak emerging fund. He has Axis small cap. He has Nippon India. He has Motilal Oswal Nasdaq and Corpus for child education. Currently 3 years old is the age of the child, and he wants to accumulate a corpus for retirement as well. The SIP amount that's going on every month is 30,000, and he also wants to understand if he can remove Parag Parikh FlexiCap ICICI Nifty Next 50 from his portfolio. He wants to know if he can add these funds in his portfolio. And yeah, that's it. All the details that I have right now for you, Anil.
Yeah, so first of all, I think he's done a reasonably good job and diversified his investments. Of course, there's a little bit of focus towards the mid cap and the small cap funds. So that is something which is definitely there. Uh, Coming back to his needs and requirements, yes, so he has a child of 3 years, and he'll probably need the money when his child is 17 for the education side, and similarly, for his own retirement, possibly in about 21 years plus. Ahead is what he's mentioned. So based on the current investments that he has, he'll probably reach something like 1.16 crores at a say 12% type of return. So that's one place to start with. Sukanya Samriddhi is something that he can use it for his child, at the 21st age. So that will take care of one part of the requirement. Okay, and so coming back to the funds that he has, uh, there's two approaches to look at it. One is to say, can I do index funds, etc. Our view is that today managed funds sort of do better. So he could probably look at an ICICI Group Blue Chip or a HDFC Top 200, which have sort of done better than the index. So those are funds that he can look at. Both he has UTI 50 index fund, and he has the HDFC index fund, which is a Sensex fund. So both of them, I think, if you would like to sort of look at an actively managed fund, then ICICI Group Blue Chip and HDFC Top 100 are funds to look at. Now, the other part of it is his question on, should he look at, say, Parag Parikh FlexiCap? Okay, so Parag Parikh FlexiCap is something which, he could actually look at among the funds that he has, suggested, because he said, can I add into Nifty 50 or any other scheme? I think Parag Parikh also fits in well because he has then large caps, he has mid caps and small caps. So having a flexi cap will fit in well into his portfolio, and I think he will do well.
All right, so that's a solution for Avinash. And all right, so do you also want to recommend or comment on his other investments like PPF and Sukanya Samriddhi Yojana, which way is a very beneficial and a good investment instrument to have, especially for girl child education. But when we talk about goal-specific investments, Anil, no doubt Sukanya Samriddhi Yojana is a very good investment horizon or an option. But then alone that kind of an investment, because it's also a debt investment that you have, how can you also help him make his portfolio goal oriented or goal specific? Yes, equity exposure, you've commented on that and recommended your strategies, but then specifically for girl child education, if at all that might be a question, or that could be a question, on behalf of Avinash.
Yeah, definitely. So if you look at it, needs like, your child's education are very important needs. Now, from a requirement like that, I think having some bit of it on the debt side also takes care of your overall, debt allocation. So I think it's not a bad idea to do it for a conservative need. So kind of somebody definitely one can look at. Yes, you would also need to add on to it because is unlikely to be sufficient for all the requirements. So you have maybe a couple of options that one can evaluate. One of them, is to set aside one of the funds that you're doing here, right, towards the requirement of your child's education. And so that can be, for example, your large cap fund can be for that. Even the Parak Parik, you can assign for it. But if you want to go a little more conservative, then you can even look at either a child gift fund, which is basically a hybrid fund, and you can go for the more aggressive hybrid, option there, the growth option. And you also have options like, you can choose even dynamic asset allocations or an aggressive hybrid for a particular need like that. And that would sort of ensure that you have sort of an in-between risk, okay, moderate to high risk, and you're also able to beat inflation because of the equity linkage in those particular schemes.
All right, let's move on to our next viewer's question. And question is coming up from Dhanesh, and he is 25 years old, planning to start an SIP for 15 to 20 years. And he's selected few funds for himself based on his research and the data you get from investment journals and other platforms. He wants to have a diversified approach based on fund house investment strategies across market caps, actives, and passive ways. There are 7 funds that he selected for himself, and he's reduced the selection from 11 to 7, and the 7 funds he's shortlisted, have been based on a lot of other criteria that he's talking about. So let's just get on the funds that he has in his portfolio. Nippon India Nifty 50 Value, UTI Nifty 200 Momentum, Parag Parikh Flexi Cap, Kotak Emerging Equity, Nippon India Small Cap, Motilal Oswal S&P 500, SBI, Contra Fund, and if there are any funds doing better than these, he would like to replace that fund with the current existing fund. So, interesting question, but once again, we don't have the viewer online with us. So, Dhanesh, congratulations. You're 25 years old and you're planning to start your investments, your investment journey at this very early age. You've got time horizon 15, 20 years. You're doing your own research, your own homework. Based on that, you have, made a portfolio of mutual funds. He's Anil, he's taking care of not only the asset allocation but also diversification aspect of it. But one thing in his question that really can be a very good point to start off your answer with is, he is asking you if there are any other funds available in the market which are better than the ones that he selected in terms of performance and other return aspects. Now, is that approach the right one? I mean, no doubt you need to see a fund which is fundamentally strong, has got the right kind of allocation and portfolio exposure as well. But then, what would be the definition of a best fund? Every investor clearly looks at the return, which should not be the only criteria. Past performance definitely should not be the criteria. But then, when viewers ask us these kind of statements that, I just want to replace a fund with the best performing fund in the market, how can we explain them that this should not be the strategy and this should not be the way ahead for your financial portfolio?
So, unfortunately, you make an investment based on looking at past returns, right? And it's not necessary that the past returns can be sustained, right? And if you go back and see on a 1 year basis, which is, for example, the top performing fund, you will find that keeps changing year by year, right? So, in fact, even if you look at from the broader category, if you look at a large cap, if you look at even debt, equity, sectors, etc., you find that there are changes which are happening on a periodic basis, right? So what is worked in the last year may not work in the subsequent year. In fact, if you look at very short terms, you're most likely to go and pick up the underperforming funds, right? Because some of the top performing funds do very well in spurts, and it may not be good for your overall. So that is something to keep in mind. Now, yes, does that mean you should not look at returns at all? Definitely not. You need to look at returns. You need to look at maybe longer term. You need to look at a combination of risk as well as returns, right? So today, if you go to most of the portals, right, for money control through value research, etc., you will actually find that you have a lot of risk data as well. You can see how the fund has done when markets have fallen. So I think you need to do a slightly deeper level of research, and then it's impossible to get the best performing fund in the future, right? So you should be reconciled to the fact that it's not possible. And what you can do is try to look at with more probability, which is likely to be more consistent. Okay, and I think that should be the way to go about it. So that's, I think, the first point, that I think he can sort of keep in mind while, and for any other investor while you're investing. Right now, coming back to what are some of the funds that one can look at? Again, he's chosen, one of the Nippon India Nifty Value 20 Index Fund, right? So you would, on the other hand, have say an ICICI Pro Value Discovery, which has done very well in the same value category. So that is something. Of course, it's more actively traded. UTI Nifty 200 Momentum Index Fund, I left it because it's also, I think, been interesting. The momentum index has been doing well, and I think we could, just continue in the current yeah, fund itself. So I'm not suggesting a change there because it's automatically, it's a little active in terms of being able to, and dynamic, I would say. Uh, and of course, he has the other Parag Parikh Flexi Cap and Kotak Emerging Equity. He has Nippon India Small Cap and SBI Contra Fund. So all of these, I'm suggesting that we can sort of continue with them. What I'm The other change that I'm suggesting is on Motilal Oswal 500 Index Fund of US stocks. That is coming back from a standpoint that we would prefer having investing into Indian equity at this point of time. The second point is we think that he could use some bit of a large cap fund. So we think you can supplement his portfolio and probably replace this fund with ICICI Pru large cap fund. So that is something which is one change that I would suggest for him.
All right, so that's the answer for our viewers' question, Dhanesh. All right, let's dip into a quick break, but then post that more question or more viewer questions coming up. Welcome back. You're watching The Money Show, and let's get back to our viewer questions. And to answer those viewer queries, I have with me Anil Rego. We will take Rania's question from Hyderabad, and she's looking at parking her money in mutual funds, and she has saved up around 5 lakh rupees, and she wants to understand if this can be invested in mutual funds, and if yes, then what should be the strategy. Are index funds a good option for long-term wealth generation? What should be the idealistic expectations or realistic expectations if you're investing in an index fund, and what would be the recommendations? So interesting. Unfortunately, I don't have Rania online with me, but then Anil, how would you like to design the financial portfolio? 5 lakh rupees, time horizon not mentioned, and new investor, as in first-time investor in mutual funds.
Yes, so I think when you're a first-time investor in mutual funds, it's good to be a little conservative in terms of what you do. Okay, so from that standpoint, you can devise a strategy. Since you have 5 lakhs and you want to invest that lump sum, I would suggest while you're starting, maybe do a systematic transfer, rather than, putting it one time. And what is the systematic transfer? The systematic transfer is basically, saying that you put the lump sum, let's say out of this 5 lakhs, you put, say, a lakh in a debt fund. Okay, a debt is a conservative fund and more invested in bonds and debentures, and not linked to equity. So, and then transfer it systematically into a particular equity fund, right? So, and that will probably do well for you. And since you're looking at long-term wealth generation, equity is a good area for you to look at. Now, while you're building up your portfolio, what is it that you can do? We suggest that you break it up between, say, a large cap, a flexi cap, a mid cap, and possibly a small cap. Now, for you, I would rather suggest, we do a little bit of a dynamic asset allocation, which will be, taking care of risk a little aggressively. It's a hybrid fund. So an ICICI Pru Balance Advantage Fund is something, that will bring a little safety to your portfolio. So out of this 5 lakhs, 75,000 you can do directly in one shot. And the rest of the equity funds, you can see whether you want to, put in a debt fund and then transfer or invest lump sum into these particular funds. You can do an ICICI Pru Blue Chip, which is a large cap fund, and you can sort of look at that. You can look at a HDFC flexi cap. Now Blue Chip, you can probably again put 75,000 rupees out of the 5 lakhs, and flexi cap, you can HDFC flexi cap, you can put a lakh. Okay, since you're looking at long term rather than doing, let's say, small cap, I would rather just do a mid cap fund, but do slightly larger, keeping in mind one is not suggesting a small cap fund. So HDFC small cap, HDFC mid cap fund may be one thing that you can do here for 1.25 lakhs. And the last is you can do ICICI Pru Value Discovery. And Value Discovery, what it basically does for you is, it's a value fund and, takes care of investing into companies that are better valued. So that is something again. So a combination of these, we've looked at a slightly more defensive portfolio for you because you're starting and the fact that you're looking at lump sum. Of course, at least the HDFC mid cap and possibly, ICICI Pru Value Discovery funds, I would suggest you park it into a liquid fund of the same fund house and then do a systematic transfer into these so that you're able to manage the risk. The systematic transfers can happen over, say, anywhere between, say, 6 to 12 months. Okay, especially for the mid cap, maybe a 12 months. For the value discovery, maybe you can do a 6 or 9 months. So, which basically means that in this period, it will get transferred completely into an equity fund.
I think that will be all, and quite a detailed explanation coming up from you, Anil. Thank you so much for being on the show today, helping our viewers with their financial portfolio queries. And before I sign off, I'm going to leave our viewers with our WhatsApp number and email ID, where we keep waiting for your questions. Anything about your investment, be it mutual fund, insurance, tax, credit card, or loan prepayment, do send us your questions and we'll get them answered live by our experts. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.